Hi, everyone. This is Jacqui Cooper with Crypto Mom 2 a talk show, and I want to welcome everyone back to this episode. Definitely like and subscribe so that way you can learn as I drop different topics onto our platform. The shows are not financial advice. You need to invest at your own risk, and you also need to talk to your own advisors. Now, many of you know that I'm a lawyer and an educator, and also involved with Bitcoin mining, hence my, oops, that way, the QR code on my screen there. So if you are interested in learning about Bitcoin mining, definitely reach out to me. I can talk to you about that, and you can learn a little bit more about how that works. But in the meantime, today's topic is Bitcoin and taxes. And I am taking the liberty to repost something that Unchained actually put on their YouTube channel. And I would definitely say that they are an organization that I'm looking into. They have a lot of great educational information. I would suggest that you go ahead and subscribe to them as well as subscribe to me. So that way you can also keep learning on a variety of topics. But this topic is really important. And so I wanted to share it out with my listeners. And so again, I want to thank Unchained for doing all the great educational sharing that they're doing. Let me go ahead and cue this up. So together we can listen and learn at the same time. So with that being said, give me a quick second while I do this. There we go. All right. So today's topic is a retirement and inheritance. Again, this is with Unchained Capital. They are an organization that I also was able to meet at Bitcoin 2022 conference. And so they're going to be talking about Bitcoin as property, acquisitions, dispositions, special circumstances, IRAs. So again, let's give a quick listen. I'll be doing commentary as we listen to them as well. But there's a lot of great information here, so I wanted to share this out with everyone in my connection.
As I sit here in our headquarters in Austin, thinking about the beautiful synergy between Bitcoin and Texas, I'm going to pass it over to Jeff to talk about the beautiful synergy between Bitcoin and taxes.
Thank you very much, Connor. So the first thing that, is sort of the foundational thing everyone needs to understand when we're talking about taxation of Bitcoin in the US is that Bitcoin is treated under the tax code as property and not currency. Now, what's particularly interesting about that is there's no statutory authority that says Bitcoin is property. And there's actually not even any formal regulatory authority that says Bitcoin is property. So let's parse that for a second. By statutory authority, what we're referring to is an actual section of the Internal Revenue Code, and that would have to be actually enacted by Congress. So at that level, it's not all that surprising that Congress has not gone out of its way to, address Bitcoin's tax classification. As most people know, it's kind of hard for anything to get done in Congress. Formal regulatory authority in the context of taxation refers to Treasury regulations interpreting the Internal Revenue Code. And those Treasury regulations are found within what's called the CFR, the Code of Federal Regulations. So normally what would happen in this situation is the IRS would actually issue an interpretation under the relevant section of the Internal Revenue Code stating that Bitcoin fits the definition of property and not currency. And then there would be a notice and comment period and a formal adoption process. And after that, it would make its way into the Treasury regulations. That's not how the IRS did this. The Bitcoin as property idea is solely based on their best interpretation of existing law. And they just kind of threw it out there in an IRS notice. That's notice 2014-21. An IRS notice is sort of interesting because we don't know how much actual deference that is entitled to. So when you're talking about a Treasury regulation, that has something called Chevron deference, which means that if you're a taxpayer and you want to challenge that Treasury regulation in court, the standard applied by the judge is going to be, hey, is this Treasury regulation like a completely arbitrary interpretation of the Internal Revenue Code. So it's a high bar to meet, the Chevron deference standard if you want to challenge it. When it comes to an IRS notice, which didn't have these notices, unlike a Treasury regulation, there's no notice and comment period or anything like that. It's just something that one day they just threw out into the wild. We actually don't know whether or not that's entitled to Chevron deference. So at the current time, that's probably an academic distinction because I think the notice is probably clearly correct. And what I mean by that is the way people typically use Bitcoin today is as investment property, not for everyday transactions. So I think that's probably it's so clearly correct that I don't think that you really have much grounds to challenge that classification in court anyway. Where this could potentially become interesting in the future is if Bitcoin over time does begin to be used more in everyday transactions, and let's say the IRS does not, affirmatively go out and revoke this notice or issue a new notice stating that now Bitcoin is currency, and a taxpayer actually wants to make that argument in court. It'll be interesting to see whether or not that Chevron deference is the bar that has to be met, or if there will be some lower bar due to the fact that, again, this is not a Treasury regulation that was adopted with a notice and comment period.
Yeah, that's really insightful. And that was actually going to be one of my questions is if we see this potential, if it were to potentially change in the future and be taxed, I guess, as you said, as currency, would that ultimately be beneficial for Bitcoin, or what would the impacts of that be? And do you see that as potentially likely to happen?
Yeah, I mean, it sort of depends. I don't think it's likely anytime in the near future. I mean, this is a long ways off. Currency taxation would, the big difference would be that like small transactions, like you wouldn't have capital gains and losses. So for instance, if you're like doing Forex trading on an exchange, you have like gains and losses, right? But if you buy a bunch of euros to go to Europe on vacation, there's a de minimis standard there that says you don't have to have like a US dollar gain and loss every time you buy a muffin in Paris, right? So we would fall into that category if Bitcoin were to eventually become considered to be currency in the future, which could happen in a variety of different ways. The IRS could issue a new notice overriding the old notice. It could actually issue a Treasury regulation, which would just by on its face override the old notice. It's a higher level of authority. Or Congress could circumvent the whole thing and actually pass a statute.
Why so bearish, Jeff? I'm just kidding. You don't have to answer that one. Let's move on to the acquisition section.
Yeah. So one thing
So I am going to pause it for a second. I agree with their comments about the idea of currency versus property. I think at the moment, there's been a lot of activity where it is more property related in terms of you being used as an investment. However, I can see how with everything going on with PayPal, Venmo, credit cards, point of sale operations, Bitcoin is becoming part of the currency ecosystem. And I can see how this is definitely going to be changing the characterization of this. And what he said about going over to, Europe and exchanging US dollars for euros and us not coming back and us being hit with capital gains, I agree with that. And in my mind, Bitcoin has always been a currency. But again, with the way that the laws are written, it is not being treated as that. It's a property. So we'll have to see how. I don't think it's going to be that far away. But I do agree with him that, it's all the legislation landscape is going to have to kind of unfold in order for it to take on a different taxable condition. So let's see what they say now about acquisitions, purchases for USD.
I think that most people do know about Bitcoin is the actual acquisition, if it's in the form of a purchase, is not a taxable event. So if I go to I was going to say an exchange, but you know what? No. If I go to the Unchained OTC trading desk, how everyone should be purchasing their Bitcoin, and I buy my Bitcoin there, I don't have a taxable event. The amount that I pay for that as part of that purchase is going to become what's called my tax basis in my coins. And that tax basis is going to become very important later on, because that's the baseline figure that's going to be used in order to compute my gains and losses. On that point, keep your eyes out, because we're going to have a poll coming up soon. There are various software packages out there that can help you track your tax basis when you purchase your Bitcoin. And even if you don't intend on ever selling, that can be an important thing to keep track of, because you would want to know if you ever spent your Bitcoin in the future, right? Because as you'll see, tax basis is important in those sorts of transactions. So yeah, when that poll comes up, be sure to vote. And if you're not currently tracking your tax basis, maybe you want to look at one of those software packages and start tracking your tax basis.
So I'm going to stop this for the moment. A lot of those tax tracking packages, they are free. And so you can do research on that, or you can reach out to me. And they do connect easily with an API, accessing your wallet, but not accessing it from the perspective of ownership, but just more from an informational perspective. So you definitely can. There's not a cost necessarily, because they obviously want to have you use their services. So let's continue.
So another type of acquisition other than an actual purchase would be you actually receive Bitcoin in exchange for someone buying something from you. In other words, let's say I sell my car for Bitcoin, right? Or actually in this case, it's, yes, let's say I sell my car. Well, that's not the best example here based on this. Let's say I actually own a store. So I'm in the business of buying and selling goods. I own a grocery store. And you come in and you buy a loaf of bread for me. That's a better example, and you pay in Bitcoin. So the Bitcoin that I receive, that I acquire in that case, that's ordinary business income to me that I have to pay tax on at ordinary income tax rates at the fair market value of the Bitcoin I receive. The idea here is the taxation shouldn't be any different regardless of whether I get paid in Bitcoin or dollars. So if you come into my store and you give me $100 bill, I have $100 of ordinary income, right? If you come in and you give me $100 worth of Bitcoin, same idea. I have $100 of ordinary Bitcoin. Because, I have $100 of ordinary income. If my store or my business is not organized as a corporation or an entity, but I'm just receiving it as what we call in the tax code a natural person. And you might hear me use the word natural person throughout this presentation. That's a term of art in taxation. So natural person just means a human being. That sounds kind of funny, but the reason why we specify natural person is because person means more than just a human being. Under the tax code, a human being is a person, a corporation is a person, a partnership is a person. So when we want to drill down to an actual human being, we say natural person. So in the case of a natural person recipient on top of ordinary income tax, it would typically also be subject to self-employment tax. Self-employment tax is the amount of tax that, is the amount, it's my payment into Social Security and Medicare. It's equal to the amount of Social Security and Medicare taxes that would be paid if I were receiving that money as an employee, as opposed to an independent contractor or subcontractor or other type of businessman. And on that topic, in the case of an employee, if my employer pays me in Bitcoin, that is also subject to ordinary income tax at ordinary income tax rates, just like if I was paid in dollars. It is subject to FICA tax, which is my contribution to Social Security and Medicare. just as if I were paid in dollars. And it has to go on the W-2 that I receive at the end of the year, just as I were paid in dollars. And it goes on the W-2 at the fair market value in dollar terms based on the date I received it. So if I have an employment contract, let's say I have like a really great employment contract where I get paid 1 Bitcoin a month, right? I'm doing pretty well. Well, if Bitcoin is worth $50,000 in January and it's worth $40,000 in February, I got paid 1 Bitcoin a month, but it's valued at the time I actually received it. So that would end up, those two payments would end up going on my W-2 at $90,000. The amount of ordinary income that I recognize, whether I recognize it as a businessman, an independent contractor, whatever the case might be, or as an employee, the amount of ordinary income that I recognize on receipt, that becomes my tax basis in those coins that's going to become relevant going forward if I later spend those coins or otherwise dispose of them.
Right. So it doesn't matter when you actually sell. The tax basis is based off of when you got paid and the Bitcoin value at that time.
Exactly. That's exactly right. If I got paid today, and this can create some weird mismatch situations, which we're going to see later in the presentation, but like if I got paid today and one Bitcoin and Bitcoin was worth $50,000, I have $50,000 in ordinary income. If I spend that Bitcoin a month later and Bitcoin is only worth $40,000 at that point, that doesn't change the fact that I still had to recognize $50,000 worth of income on the day that I got paid.
So I'm going to pause this for a second. And I know that there are a lot of companies that I met at Bitcoin 2022 that are now offering the possibility that we could actually accept Bitcoin as part of our wages and our salaries. And I'm very interested in, looking into that. But keep in mind that from an accounting perspective, you have to definitely think that about if you are exchanging your US dollars for Bitcoin and that's how you're receiving it as your income, that's going to create an accounting situation that you just have to plan for. So that way, at the end of the year, you are able to provide all the documents to your team. So let's keep going.
Sure, makes sense. And a quick reminder, see a couple of questions coming through in the chat. Certainly keep them coming, but make sure to put them in the questions box in the bottom right so we can organize them, make sure we see all of the different questions coming through.
So another way that you can acquire Bitcoin that obviously people often have questions about is through mining.
And I'm pausing it here because I am a Bitcoin miner. So this is extremely interesting to me. And again, let's see what they have to say.
So acquiring Bitcoin through mining is generally treated the same way tax-wise as receiving Bitcoin in exchange for services, meaning on the day that you actually receive that block reward, you have ordinary income, right? And that ordinary income that you recognize on that day, which is based on the fair market value of Bitcoin on that day, that becomes your cost basis going forward. Now, if you're this really isn't, mining has obviously over the past, 10, what are we at now, 14 years of Bitcoin, has become a lot more professionalized than it once was. So at one point, you could probably argue that like, hey, I'm mining on a casual and infrequent basis enough that it doesn't rise to the level of a trade or business, and therefore it would not be subject to self-employment tax, only to the income tax. But at this point, that's probably kind of a tough argument to make, right? Because if you're doing mining, you're not doing it halfway at this point. It's a very professionalized thing. It's not a bright line test, though. It's subjective as to whether something is done on a consistent enough basis to rise to the level of a trade or business. And one thing I just want to emphasize is regardless of whether or not it's a trade or business, it's still subject to income tax. The trade or business distinction only matters in terms of whether or not it's subject to self-employment tax. And that only matters if you're doing mining as a natural person and you're not doing it through, say, a corporation or other entity. Because if you were doing your mining through, say, a corporation, corporations don't pay self-employment tax. They just pay regular income tax. And then you would get a W-2 for your services from the corporation. And however much you were paid on your W-2, that's going to be subject not to self-employment tax, but it'll be subject to FICA. And FICA and self-employment tax are essentially the same thing. FICA is for employees, self-employment tax is for self-employed people, but they both boil down to your contributions to Social Security and Medicare.
So I'm going to pause this again. So what he's talking about in terms of trade or business, the company that I own my rigs through, Advanced Mining, and again, use my QR code if you'd like to be on my team. I do operate this as a business. So there is a hosting, fee involved because I personally don't want to have the rigs in my home. And again, you have to do your own research, but subject to the tax laws, there are write-offs as a result of you doing a business. So the purchase of my rig is, again, depreciable. The hosting is a write-off, again, subject to whatever the laws are at the time that this is going on. Again, I might have income from the mining, but I also have write-offs that I'm able, to the extent allowed by law, to write off against it. So that's something to keep in mind when you're looking at how are you mining. There are some companies that, again, you just have to kind of take a look at all the aspects. And if you have any questions, definitely reach out to me and I'm happy to give you, we can have a chat offline. But this is, very interesting how all this is working out. So let's keep listening and let's see what they talk about next.
Right. It's for that reason, ultimately, that we don't offer Bitcoin mining within the Unchained IRA. Is that correct?
Right. Because if mining meets the standard of a trade or business, then in addition to all these tax consequences I just talked about, it means it creates what's called a UBIT problem within your IRA. That stands for unrelated business income tax, meaning your IRA is not tax-free anymore. You start having to pay income tax on your IRA income, which is generally not something that you want to have to do. Interestingly, it's not necessarily the case that trade or business for self-employment tax purposes means the same thing as trade or business for UBIT purposes. They are different sections of the Internal Revenue Code. However, the Treasury regulations kind of say that if it's enough of a trade or business that you'd be able to take a tax deduction for your expenses if you were doing it outside of an IRA, then it's typically subject to UBIT if you're doing it inside an IRA. As a result, I think you'd have a tough argument to make that it wasn't a trade or business, because as we all know, miners do deduct their costs against their mining income typically, such as their electricity and their equipment, those being the major costs of a miner.
Got it. Yeah, thank you. We can certainly cover that in further detail if our audience wants to in the IRA section. Cool. So let's move on to one of my favorite sections of this presentation, which is just talking about gifting Bitcoin to others, which is something we always encourage.
Yeah. So another way you can acquire Bitcoin is obviously through a gift. One of the stories that I tell that Connor particularly likes is, when I was a kid, which was, in the Stone Age, we used to get on birthdays, it was very common that you would get paper savings bonds, right? Like your aunt would always give you some paper savings bond and you're a kid and you're like, this stinks. I don't want this. Like, here, mom, put it away in the safe deposit box for me. So like my modern twist on that when it comes to like my friends' kids or my niece and nephew is I give them Bitcoin on their birthday. I just slip a little paper wallet with a small amount of Bitcoin in a card. And, I tell their parents, of course, to sweep that paper wallet into an Unchained vault once they receive it. But, you could use it if it's a lot of Bitcoin that you're giving and more than just, 25 or $50 worth, you might want to use an OPDIME or something like that. But it's a neat little physical thing that you can put in a card and give to a kid as a gift, and it's kind of the modern take on on giving a savings bond. Because believe it or not, they don't actually even issue paper savings bonds anymore. That's how infrequently people are giving those as gifts. Like you can't get one if you wanted to give one as a gift, even if you wanted to. If you want to buy a savings bond, like you have to do it in your Treasury Direct account over the internet. But anyway, as I said, a bona fide gift, right? So first of all, what is a bona fide gift? Because the reason we use the word bona fide there is because there are all kinds of ways we could just like randomly say to people, oh, this is a gift, right? But it has to be an actual bona fide gift. Me saying it's a gift doesn't mean anything. So a bona fide gift is one where there's true donative intent. Typically, any sort of quid pro quo is evidence against donative intent. And then it's a barter transaction in that case, which is a totally separate, kind of deal. So with a bona fide gift, the recipient does not have a taxable event upon receipt. So if I were to give Connor a Bitcoin and it was a true bona fide gift, he would not recognize any income. The weird thing about bona fide gifts is you get what's called a carryover basis from the donor. So when you receive a gift in Bitcoin, your basis is not the fair market value on the date that you receive the Bitcoin. It is the basis that the guy that gave you the Bitcoin had in the Bitcoin. That's why it's called carryover basis. So if I gave you a gift of Bitcoin, you would actually have to like ask me what my basis in those coins are. If you're giving your niece or nephew $25 worth of Bitcoin, you're not worried about it because the basis is trivial at that point, right? And if they spend it or sell it at some point in the future, they're gonna use zero basis. But if you're gifting someone a substantial amount of Bitcoin, you typically would want to, make sure that they were aware, let's say, of what their basis was in their Bitcoin. So the other thing that's important to keep in mind with a bona fide gift is the donor may need to file a gift tax return. So everybody is able to give up to $16,000 a year per recipient without having to file a gift tax return. If you go over that 16, and that 16 grand, that changes every year. It's an inflation adjusted figure. What'll happen is if you go over, let's say, that $16,000, then you have to file a gift tax return. You may not owe actual gift tax because you also have a lifetime gift tax exemption that also increases with inflation every year. It's a little below $6 million right now per person, but you still need to file the gift tax return to let the government know that you've sort of eaten away at that lifetime exemption. And once you've gone over your lifetime exemption, that's when gift tax, may actually start to kick in for you.
Yeah, and you had mentioned Open Dine previously, which was ultimately just a way to not only gift Bitcoin, but hand over the private keys to someone at the same time. I'm curious, does it matter how that Bitcoin is given? For example, sending to someone's address versus actually handing them an Open Dime?
No, it doesn't matter. I mean, the transfer takes place when that other person gains dominion and control over the coins. So that could be sending the coins to an address where they have the private key, or it could be just handing them the private key, which would be the case in an Open Dime or a paper wallet, right? Either one of those things for tax purposes are equivalent.
Got it. And I think we'll talk.
I don't recommend this, but even if you were to send it to their Coinbase account where they don't have the private key, Coinbase gives them a right of withdrawal. So that still would be considered the fact that they had carryover. They would have dominion and control at that point. Or any wallet where they don't have the private key.
And I think we'll be talking about dominion and control a little bit further in this next section. So maybe
that is correct. Another way you could acquire coins in general, and this has become less of an issue for most people since 2017, thankfully, is through forks and airdrops. So you have ordinary income upon receipt of a fork or an airdrop in the amount of the fair market value of the forked coins on the date that you receive. We're going to talk about this further, as you said, dominion and control over those coins. That fair market value, which is the ordinary income that you recognize, that becomes your cost basis going forward. So dominion and control is generally held to be when you have actual ability to move the coins if you wanted to. It doesn't matter if you actually bothered to download the necessary software to move the coins. You had the ability to do so. That's the date where this became an issue. So normally that's the fork date. If you're holding your own private keys, that would be the fork date. The exception to that would be if you're holding the coins custodially, it would be the date that the custodian actually goes and grants the coins to you. So Bitcoiners had a lot of issues with this in 2017, right? Because there was the Bcash fork. And whether you wanted your Bcash or not, you got it. And you had and on the date that the fork took place, Bcash did have a fair market value, right? It was trading on that day. So you did have income on that day, and you were supposed to, declare that income on your 2017 income tax return, right? Now, the good news is the forks that we've seen since that point have generally just been like random stuff that hasn't had a readily ascertainable fair market value. So the way most people have dealt with that is by not claiming anything at all because the coins had no fair market value on the coin date, on the fork date, excuse me. They were just a zero fair market value. They weren't trading. There was no way to easily dispose of them. So the fair market value out of that in that case was necessarily zero. In the case of the Bcash fork, some people did really well with that. I immediately downloaded like Electrum, whatever. There was like a version of Electrum for it, grabbed my coins and exchanged them for real Bitcoin, right? So I made out fine. Other people, particularly people that had their coins on Coinbase, had a problem because, which we're going to talk about later. Coinbase, unfortunately, did not credit them the coins until Bcash was like at its all-time high. And then when they actually tried to dispose of those coins, hopefully to exchange them for real Bitcoin, it did not go well for them because they ended up with a capital loss that they could not use to end up offsetting all of that income. So we're going to talk about that situation later in the presentation.
Perfect. Well, I know we got a lot of content here still left to go, so we can move right along to dispositions here.
Yeah, so when you dispose of Bitcoin, you have to keep in mind whether your holding period. If you've held your coins less than a year, it's a short-term capital gain, meaning you're paying taxes at ordinary income rates. If you've held your coins greater than a year, you pay tax at the long-term capital gain rate, which are favorable tax rates. Depending on the amount of your other income, that long-term capital gain might be taxed at 0, 15, 18.8, or 23.8%. So with the classic sale for US dollars, you transfer your coins onto an exchange and you swap them for dollars. The difference between the sales price and your cost basis, which is something we've been talking about throughout this presentation, how you determine your cost basis, that's the amount of your capital gain or loss. And whether that gain or loss is short-term or long-term depends on your holding period, as we discussed on the last slide. If you take your coins and you use them to make a payment for goods or services, what happens in that scenario is the sales price is the fair, it's a deemed sale, first of all, for US dollars. And the sales price is the fair market value of the goods or services that you received in exchange. So you have a capital gain or loss between that deemed sales price and your cost basis. If the underlying expense that you're using the Bitcoin to pay is a deductible business expense, the fair market value of the goods or services received is the amount that you're able to expense. If it is a payment to a subcontractor that you're making in Bitcoin in the course of your business, you have to report that payment on a 1099 NEC, just like you would if you were paying a subcontractor in US dollars.
Great. And a quick reminder, we do have a couple of polls up in the bottom right corner. There's a poll box. Definitely go in there and let us know your thoughts.
Another disposition is a possibility is when you're disposing of Bitcoin that you're holding as inventory. That's a rare situation. I doubt it's going to apply to anybody here. But if you're actually in the business of buying and selling Bitcoin, like if you were operating an exchange, or if you're Unchained Capital, we're in the business of buying and selling Bitcoin with our OTC desk, then Bitcoin is, instead of being treated as a capital asset to you, it's treated as inventory. And in that scenario, your gains and losses are not capital gains and losses. They're ordinary gains and losses. So what that means is, as an ordinary gain, it's always subject to ordinary income rates, regardless of holding period. And as an ordinary loss, instead of the loss being limited, so one thing we haven't talked about yet is that capital losses, which is what most people experience when they sell or dispose of their Bitcoin as a loss, you can only use those against capital gain income. You can't use those against your ordinary income. The only exception is up to $3,000 of losses per year you can use against your ordinary income. But otherwise, generally speaking, capital losses can only be used to reduce your capital gains. That's not the case with ordinary losses if you're in the rare situation where Bitcoin is considered inventory in your hands. Another way that you can dispose of your Bitcoin is to charity, which is a really great way to do it because there are so many tax benefits to this beyond a normal charitable deduction that most people forget about. So if you have Bitcoin and your holding period on that Bitcoin is long term, if you donate that Bitcoin to charity, you get a tax deduction for the full fair market value of the Bitcoin that you have sent over, not just your tax basis. That's big, right? And on top of that tax deduction, you do not have to recognize a gain or a loss on the disposition. Other than like a bona fide gift, this is the only other type of disposition where you don't have to recognize any sort of gain on appreciated Bitcoin when you get rid of it. Now, the recipient has to be a 501c3. And if you are gifting them over $5,000 worth of Bitcoin, you have to get what's called a qualified appraisal. You can't rely on just like a trading value. You actually have to hire a guy to, he has to be an IRS qualified appraiser. That's a thing. To actually issue a formal appraisal opinion on the value of the Bitcoin that you gave. There are a variety of different, what are called, they call it cryptocurrency appraisers, as you'd imagine, because a lot of people, unfortunately, are giving things other than Bitcoin that will do this. If you're only gifting Bitcoin and not hopefully other types of cryptocurrency, it's usually like $500 or something like that to get the appraisal. So as you can see, this is extremely favorable. There's a double tax benefit here. Not only do you get the charitable deduction, but you also do not have to worry about the capital gains. So one strategy you can do, if you have low tax basis Bitcoin, you can donate that Bitcoin to charity each year and then repurchase a new Bitcoin to replace it. And now you've just effectively bumped your cost basis way up without having to deal with any adverse tax events.
All right, I'm going to pause this for a second. And if you don't have a favorite charity that you would like to donate to, definitely contact me because I have a few charities that are able to accept Bitcoin and other crypto, and they all have great causes. And so if you need any suggestions, again, you can do your own research as well, but I'm happy to give you a list of charities that you might be able to check out to help you with this. Again, you always have to do your own research, but let's keep listening.
And I will make a plug here. Jeff wrote a fantastic piece on our blog about charitable remainder uni trusts, also known as CRUTs or CRUTs, that I highly recommend. It's really interesting.
Yeah, we call them CRUTs. It's an ugly sounding word, but that is what they're called. Yeah, so another thing to keep in mind here with dispositions is which Bitcoin are you actually disposing of when you dispose of Bitcoin. The default rule is FIFO, meaning when you sell or otherwise dispose of a Bitcoin, you're selling or otherwise disposing of the oldest Bitcoin that you have. However, so this is very weird. IRS put out an online Q&A regarding what they call virtual currency. I wish I could tell you what level of authority an online Q&A has. You know, when we talked about Chevron deference before, I have no idea because that's a weird thing. I've been practicing tax law for like 15 years. I had never really dealt with an online Q&A as a type of authority, but it's a thing they threw out there. And you're probably in good shape if you follow it. So under IRS online Q&A 38 and 39, specific identification is allowed in place of FIFO with correct records. The way the answers to those questions are written is that specific identification requires disposition by private key, public key, and address, or by records showing transaction information for all units of a specific virtual currency, such as Bitcoin, held in a single account, wallet, or address. What does that mean? I don't know. That's basically a lot of words that don't mean anything in terms of giving guidance in terms of how you could actually use specific identification. Specific identification means you can point to a specific Bitcoin that you sold rather than relying on FIFO. You could say like, I'm selling this Bitcoin that I bought on this day. If you're using coin selection to dispose of a specific UTXO, that I think is like a fail-safe way to substantiate this, right? If you want to go the specific identification route. Absent doing that, I'm not exactly sure what to tell you. I wish I could give you better advice there. Talk to your tax attorney, of course, but you know, the safe route is either to stick with FIFO, or if you're going to do specific identification, use coin selection on a specific UTXO. Beyond that, like I said, I don't know. I don't have a good answer for you. You're kind of flying blind and doing your best.
Yeah, and that's a nice reminder to remind everyone on this call and on YouTube that we cannot give tax advice. Let's move on to the special circumstances.
Yeah, so we could get weird mismatch situations because of the way that Bitcoin is taxed. So let's say this is funny. So I did this presentation not that long ago, and we left the original numbers on here because they were round numbers. Bitcoin was actually only $10,000 at the time I first wrote up this presentation. It shows you how much things have changed. So let's say that you receive one Bitcoin for services, and at that time, one Bitcoin, the exchange rate is $10,000. By the time you sell that Bitcoin later that year, that Bitcoin is only worth $5,000. Well, when you file your taxes for that year, you have $10,000 of ordinary income and a $5,000 capital loss. Those do not offset each other. The capital loss can only be used against the lower taxed capital gains, not the higher taxed ordinary income. So you end up in a really negative tax situation there by doing that. Obviously, not selling would be the best way to get out of that problem. But absent that, you're in a little bit of a rough spot there. The only exception, as I mentioned before, is if you have no capital gains at all in a given year, you can use up to $3,000 of that capital loss against your ordinary income. But again, because of that $3,000 limitation, that's not going to help you that much. So the Coinbase Bcash fork debacle is a good example of how this plays out in the real world. Coinbase gave its Bitcoin holders their Bcash at basically its all-time highs. They didn't give it to them on the fork date. There were like lawsuits about whether they were going to get it at all. It was like a crazy situation. And by the time most people actually were like, got the Bcash credit to their account and were able to flip and switch that Bcash over to real Bitcoin, the price of Bcash had fallen significantly. The exchange of the Bcash for Bitcoin is a deemed sale of the Bcash for US dollars, followed by a deemed purchase of the Bitcoin for the US dollars. So the deemed sale part of that transaction creates a capital gain or loss. In the case of those people, capital loss. So back when this happened, I was still in private practice as a lawyer, and I had clients that were caught up in this. So they ended up with a lot of ordinary income and a large capital loss, but the capital loss couldn't offset the ordinary income. So it was kind of a lousy situation for them to be in, but there wasn't a whole lot they could do about it. So this Coinbase situation, which created a lot of tax agita for a lot of people, here's the good news. It happened in 2017. That means your tax return for 2017, if you did not file an extension, was due April 15th, 2018. If you filed an extension, the due date was October 15th, 2018. That means that the statute of limitations typically would have expired for your 2017 tax return on either April 15th, 2021 or October 15th, 2021, which means you're essentially outside the audit period for those situations. The only exception is if the amount of like income you had from this crazy forking stuff that went on in 2017, if you didn't include it properly and your failure to include that properly resulted in what's called a material misstatement of income, which basically is like a 20% threshold, then the normal 3-year statute of limitations becomes a 6-year statute of limitations. So in that case, the statute of limitations is open to either April or October 2024 instead of April or October 2021. So just something I thought that's worth mentioning. If you held Bitcoin back in 2017 and you don't feel confident that you handled it correctly, talk to your tax advisor, determine whether your statute of limitations is expired or not expired. If it's not, determine whether or not, that maybe you should, file an amended return in that case. Again, regardless of whether you held on Coinbase or not, you would have had some level of income, due to the receipt of those forked coins. So you may want to check that out and look into it. One other point I just want to make is the date you filed your statute of limitations expire on the due date or the file date, whichever is later. So if you filed your return in February, that doesn't matter. The statute still doesn't expire until the relevant April. And if you filed an extension, it doesn't matter whether you filed, even if you filed an extension, even if you filed your real taxes before April 15th, the statute of limitations still goes to October because you affirmatively extended your due date. So it actually, a lot of times, this is sort of a side thing to mention here, but people sometimes act like, why wouldn't you file an extension? Well, this is one reason. You're not only extending your due date by 6 months, you're extending the statute of limitations for audit by 6 months whenever you file an extension for your tax return. Now, if you missed the deadline, let's say you filed an extension, but you didn't file your actual taxes till November, then the statute expires in November, not the actual due date, because you didn't file it on time. So side diversion there, but something that may be useful if we're getting close to tax time and you're trying to decide whether or not you want to file an extension.
Yeah, no, that's really interesting. And to move on to the next section, obviously there are smart ways to go about your taxes in terms of trying to limit your tax liability. And with Bitcoin, if Bitcoin continues to do what it has been doing and what we all expect it continue to do, that could make a big difference. And so, at Unchained Capital, we're really excited about the idea of Bitcoin within IRAs, and that's a great transition to our next section.
Yeah, so holding Bitcoin in an IRA, the nice part about it is it makes all Bitcoin transactions totally non-taxable. You don't have to worry about even tracking your tax basis using any kind of software, because your tax basis in your Bitcoin isn't relevant with when it comes to Bitcoin held within your IRA. If the IRA is a Roth, not only that, but the assets are free of tax whenever, even if you pull them out to spend them in retirement. An Unchained IRA allows you to hold in an IRA while holding your own keys, but still, complying with what are called the custodial requirements imposed by the McNulty case. And if we don't have time really to go into that today, but if you're interested in that, you can listen to our McNulty webinar, which will be linked in there, that really does a deep dive on that. You can also do tax-free rollovers into an Unchained IRA from existing retirement plans. Connor is the leader of the let's say the IRA department on our client solutions team. So should you decide to sign up for an Unchained IRA, Connor will be your guy. So I'll let him take it for a minute in case.
And I'm going to stop this at the moment. I'm definitely going to be having another episode about Unchained Capital and their IRAs. So we'll definitely be having a continuing conversation about that.
He's got anything he wants to mention there about the Unchained IRA process.
Yeah, absolutely. Thank you, Jeff. And, to be mindful of time, we have so many questions in this question box. I definitely want to try and get to all of them. So I'll make a plug once again for our Unchained IRA webinar that is living on our YouTube channel currently. I'll make a plug for the webinar that we will be hosting in 2 weeks that will focus on answering as many questions as we can in regards to the Unchained IRA. And certainly, if you are interested in learning more, you can visit our website, and we have an entire page dedicated to the Unchained IRA where you can start your order or just set up time to speak with someone from our team to learn more about the product. But ultimately, what the Unchained IRA allows you to do is hold real Bitcoin in an IRA account that you control the private keys to. You can set up a traditional Roth or SEP IRA at Unchained Capital and roll over funds from a traditional, a Fidelity or a Charles Schwab IRA. You can also roll over from a 401k from a former employee, and we will walk you through the process of rolling those over as US dollars, converting it into Bitcoin, and importantly, setting up a custody solution through the Unchained Capital platform, where we teach you and help you hold your own private keys, but also create a structure called collaborative custody, where we actually help in the responsibility of holding your keys. So in short, we don't really have time to jump into it fully on our conversation today, but what we do is we set up a 2 of 3 multi-signature address. You hold 2 keys and we hold 1, and you need any 2 of those 3 private keys in order to actually access that Bitcoin. Since we only have 1 private key, we don't have any ability to actually access your Bitcoin or prevent you from accessing your Bitcoin. But in a doomsday scenario, if you ever lost one of your private keys, Unchained Capital could actually help you recover your Bitcoin and get back to good standing again. And so that is a structure that we can set up for all of your Bitcoin related needs, whether it's personal Bitcoin, IRA Bitcoin, business Bitcoin, or otherwise. But ultimately, the Unchained IRA allows you to do that specifically within a 2 of 3 multi-sig context in collaborative custody. So there's some links on the page right here. We'll include them in the notes as well. And certainly feel free to set up time with our team if you're interested in learning more.
So again, I'm going to pause it for a quick second. The multi-sig concept is very interesting, and I'm going to be having more conversations about that on future episodes. So let's continue to listen.
Now with that, we can jump right into the Q&A section here. There are tons.
All right, so I'm going to stop on the Q&A side. I definitely want to thank everyone who's been listening. Definitely like and subscribe to Crypto Mom 2. Reach out to me at cryptomom2consulting@gmail.com. I'm definitely a proponent of estate planning, of making sure that you have your will, making sure you have all your ducks in order, because again, you are doing things that are creating wealth for yourself and your family. And this is something that you need to think about the entire package. So this was a great webinar. Again, my shows are not financial advice. You need to invest at your own risk. I would also just like to say, please visit www.bitcoincinderella.com. I've created a really great fairy tale that allows you to talk about what's going on in the blockchain with your youth of all ages, because they are being exposed to everything. And so they need to learn the terminology and how to stay safe as well online on Web3. And also to understand a financial literacy. So in this new world. So again, everyone, like and subscribe. Be kind to yourself, be kind to others. We're all connected. We're all one world. And I'll talk to you soon. Have a great day. Thank you. Bye.